There we go. Good morning, everybody. How are you? Welcome to the pre-market prep session. As the countdown to cut is in its final hours, it is September 18th, 2024. We're looking to get the first interest rate cut that we've gotten in 4 years. Fun stuff, exciting times. In terms of the pre-market prep session, we're here to do one thing and one thing only. Let's get 1% better by the end of this session. So we start the session, we lock in, we parse through information, we do analysis, we train our brain to think a certain way as we go through dissecting and analyzing info that we get. And in that way, it just becomes the status quo, right? We find ourselves thinking in a way, utilizing a mindset that allows us to leverage more out of the information that a normal person gets, right? To process it in a way that can serve our good a lot better than it does, the normal person that hears stuff and it goes in one ear and out the other. And I'm excited to make today another great day, right? We got FOMC meeting today, that information coming out, that interest rate decision at 2, and then normally we have Powell at 2:30. So I don't expect a whole lot before then, right? You guys know how it goes. If you don't, I'll give you, a little secret. Typically, we don't do much movement wise, kind of net movement going into the FOMC minutes. So by net movement, I mean we might start the day going up, then we go down, and then we end it kind of very close to where we started it, or vice versa, right? We could go down and then go up. Don't take my word as law here. What I'm saying is that by the end of the time, right before FOMC, typically we're in the same spot that we were, near open, or we haven't moved very far yet. So, don't kind of waste time or buying power or mental capital kind of going through the ringer here before we get, this FOMC information. It's highly uncertain what we end up getting, 25 or 50 basis points. So, we'll just have to keep our head on the swivel, be, aware of what we could get and be ready to execute, right? But make sure you throw those ones in the chats, whether you're here live or via replay. All of that is important because you got to state your intention, right? We're not here to screw around or, yeah, we're here to have fun. We have fun sometimes, but at the end of the day, we're here to close the gap between where we are and where we want to be, right? We're here for a reason. So make sure that you make that reason plain so that you can continue to grow and thrive and make money in markets, right? Focus on those little things. The big things take care of themselves. Now, top news, supersize me. Cheers can be heard from the investing world as the much anticipated Fed easing cycle finally begins. It's been 4 years since the FOMC last cut rates and 14 months of holding them steady. So today's rate decision, press conference, and policy projections will all be a big deal. There's been much debate over how fast the Fed will move as the starting gun is fired, so stay tuned for the headlines on Seeking Alpha starting at 2 p.m. Eastern Standard Time. Now, soft landing, while inflation data has drifted downward toward the Fed's 2% goal, unemployment has risen faster than expected since the last FOMC decision in July. That has led to worries by the central bank about cooling labor market conditions, which is harder to stop once demand for workers has softened. It's even prompted to talk about a stronger level of rate cuts, but the majority of Wall Street breakfast subscribers still expect the Fed to trim its benchmark lending rate by 25 basis points compared to some 20.6% who see a 50 basis point reduction. While the pace of the initial cut will be revealed in the coming hours, a bigger area of focus will be the federal funds rate range for the end of 2024, next year, and in the long term. Look to the FOMC's dot plot for that insight. In the last summary of economic projections issued on June 12th, the median Fed funds rate projection was 5.1% at the end of 2024 and 4.1% for 2025. And how much that changes from the prior outlooks will be exceptionally important for investors. Now, in terms of Seeking Alpha commentary, quote, while the near-term volatility could persist, a more accessible monetary stance should lead to improved growth and increased liquidity, a highly constructive dynamic for quality stocks and other risk assets. Um, Investing group leader Victor Durganov wrote in It's Finally Time to Cut Rates. Quote, corporate earnings remain healthy, and despite the potential temporary growth slowdown in AI and other segments, we could see improving and better than expected earnings in future quarters. We've already talked about what that looks like. Typically, whenever you get rate cuts, on average, over the course of that next 25 days after cuts, market goes up 5% on average. Doesn't have to be. There's been times when it's gone up 20%. There's been times when it's gone up 1%. Um, So you just know the average, but at the end of the day, that doesn't mean that's what it ends up being now. So just be aware of that, right? And then after that first 25 days, typically for that next year, we had lower. So this doesn't mean what you think it means and what, it might sound like it means on, all these different TV channels about stocks and money and stuff like that. Those are to pump out a narrative in order to use you as exit liquidity. It's as simple as that, right? They tell you to buy when we were down in February of 2022, knowing darn well the downtrend hadn't been broken and that we were going to continue downtrending till the end of that year. You've got to learn how to make these decisions yourself, make these evaluations, do these evaluations effectively yourself. Otherwise, you will continue to be beholden to whatever the narrative of someone who's taken the time to do the work tells you. And that's what's unfortunate about life is that the lazy have to follow those that aren't lazy until they decide to not be lazy. And that's why we're here each and every day, actively deciding when you put that one in the chat to not be lazy, to take care of business, to mind the small things. And what is that going to do? Put you ahead of 90% of the people walking around in these streets, right? Because they're just locked in the matrix and they do not care at all to look deeper than the surface level, right? Whatever their algorithm tells them to think. Go in, learn how to do things for yourself, and it will completely change your life, especially when it comes to operating in markets. So yeah, we'll see what the charts have to say. That's always the biggest thing. People say, "Oh, are we going to go up? Or are we going to go down?" We won't know until we continue to get more information. But it's good to know on average what happens. That way, you can form your expectations. But at least you have something, right? It's like if you are trying to make pizza, and if you start from dough versus you starting from yeast and water and all this stuff. It's like, can you get there? Yeah, but it's nice to at least have a good starting point. And that's what expectations are, right? Historical averages and all that can help you formulate expectations that you know how to move. Just like I talked about how markets typically move on Fed days, right? Knowing that is important, knowing how we typically move, right? When that interest rate decision happens, typically for 1 to 5, maybe 15 minutes afterward, we get some type of pop. It can be as short as a few seconds, but typically at 2 p.m., as soon as that information drops, we get a pop, right? Then you guys already know how typically you fade the first move on a Fed day. It's not always that we get a big move. We haven't this year sometimes, and a lot of people get screwed. They try and buy calls and buy puts, and then whichever one pays, they go with that. They cut the other one. If we don't make a big move, you screw yourself with that, right? So knowing also, typically how we move, all of that expectations play a huge role in your success because you're starting from level 10 instead of starting from level 0 and you're trying to get to level 20. And that's why being here is so important, and why being a part of the Stock Options Made Easy community is so important because we're actively taking advantage of opportunities that have a high percentage chance of return so that I'm not sitting here beholden to Powell. I don't give a crap what Powell does, right? If we stopped trading now, we would have made enough money for the next month and a half easily over the course of what we've done these past 2 weeks. So that's where you want to be going into this. You always want to be that person who if something happens, awesome. Do I need it? No, right? You don't want to need anything. You want to have nice, consistent base hits as opposed to coming into something in that poverty mindset, fight or flight mode where you're like, I got to make something happen. I've been waiting for this. This is my opportunity. I don't know what's coming, but something's going to, that is like the worst spot to be in. And that is when I tell people just walk away from markets, right? If you're relying on the market to bail you out of some life circumstance, that's not the place to be, right? This is never the place to be when you are in a high octane, really, really nervous, really, really, I need this mode. That's not the place to be, right? You want to be in a spot, a position of power, a position of leverage, a position of patience, always. So, tech news, AI infrastructure looking to meet growing demand. BlackRock, ticker BLK, and Microsoft, ticker MSFT, are planning a more than $30 billion artificial intelligence investment fund to build data centers and energy projects. We talked about this during Kaizen, right? The Global AI Infrastructure Investment Partnership would be one of the biggest investment vehicles ever raised on Wall Street through global infrastructure partners. Abu Dhabi-backed investment firm MGX and Microsoft are the fund's general partners, and NVDA is providing expertise. The fund aims to mobilize up to $100 billion in total investment potential when including debt financing. Do not miss out on this gold rush. Billions and billions and billions of dollars. You can see here BlackRock, who owns everything, Microsoft, right? NVIDIA, all of these companies are getting behind this. This is the next gold rush. And in day one of Kaizen, I outlined like 50 different companies, right? All of these different opportunities. A number of them have already crushed it, right? And are continuing to crush it. You look at uh, I mean, there's so many. We talked about Oracle. Oracle got its breakout. I'm trying to think of what one was that I was looking at yesterday. But so many of these different stocks and companies that are involved in the infrastructure that will uphold, right, and support the proliferation of AI are getting a crap ton of money. So make sure that you expose yourself to that, because gold rushes like this don't come along often. And if you had access to that, go back over that first night of recording and see, okay, where are these different spots that I could be involving myself? Um, because the stocks are pumping and they're moving silently until they're not, right? You're never going to find the next NVIDIA until it makes NVIDIA type moves and then you've missed it already. So go the extra mile, do the little things. Energy news, risk premium. Secretary of State Anthony Blinken is in the Middle East for the 10th time since the war in Gaza began nearly a year ago. The conversations in Cairo come after the Biden administration greenlit $1.3 billion in military aid for Egypt, overriding congressional requirements that the U.S. hold back some funding if adequate progress is not made on human rights. Tensions are also escalating in the region following a pager attack that was widely attributed to Israel and targeted thousands of members of Lebanese terror group Hezbollah, but oil doesn't appear to be pricing in any risk at the moment. So that's something we'll keep an eye on, but until it affects things, it's not really something that is, at the forefront of our minds. Trade news, next strike, and organized labor. As organized labor notches more wins, around 45,000 dock workers have begun threatening industrial action at U.S. East Coast and Gulf of Mexico ports. What does all this do? Serve to further increase prices. And that's why the Fed has an uphill battle, because there's so much of this that they cannot control. This ongoing trend that I've been talking about for the past 2 years of increased unionization and labor participation is only going to further drive up the cost of these goods, because every other week someone else is protesting, someone else is unionizing, someone else is, and all that does is further drive up the price of, like, every time you take one step forward, then you take, multiple steps back. Um, so we'll see, if the Fed is taking this into account, or if this is something that affects whether or not they do a 25 or 50 basis point cut. We'll see. Let's see here. Quote, a strike on October 1st seems more likely as time is running out, warned the International Longshoremen's Association. Negotiations for a new labor contract have stalled, but the United States Maritime Alliance, which represents port employers including Zim and Maersk, is willing to resume talks, quote, at any time. A looming strike has raised supply chain concerns ahead of the busy holiday season, with retailers bringing in products earlier or rerouting shipments. Now, let's see what we got going on here. In terms of today's markets, mixed bag. Japan up 0.5%, Hong Kong closed, China up 0.5%, India down 0.2, London down 0.7, Paris down 0.5, Frankfurt down 0.1, the Dow up 0.1, S&P up 0.1, Nasdaq up 0.2, crude oil down 1.5%, gold up 0.4%, Bitcoin up 1.1%. Today's economic calendar. Nothing really matters until the FOMC announcement at 2 p.m. and the Fed chair press conference at 2:30 p.m. What do I need to do to prepare, Adam? You need to set an alarm at 1:50 p.m. Tell Alexa, tell Siri, tell whoever you need to. Make sure you have it so that you realize at 1:50 p.m. that you're 10 minutes out from getting, the interest rate decision at 2 p.m. You need to set one at 2:20 p.m., letting you know that Powell comes on at 2:30. Sometimes it's a little bit late, but those are going to be like that's going to be the crux of the day. Um, and you guys know how we move on Fed days. I've talked about it a number of times. So make sure that you're aware of that, right? Go back, look at how we moved on the last Fed day, right? Use that what is it called? That feature, like the rewind feature on demand. Use that on demand feature. Look up, when was the last FOMC meeting? Go back, plug in that date, go hour by hour, speed through that price action and see how we moved so that you have an idea, and do that for the past 2 or 3 if you have time today to familiarize yourself with what you could get today. What else is happening? Google wins legal battle against $1.7 billion EU digital ad case. JP Morgan may replace Goldman as Apple's credit card partner. U.S. Steel ticker X gains as Nippon review is extended. Chevron ticker CEO, ticker CVX, CEO LNG export pause undermines energy security. Albertsons falls on last day of FTC trial over Kroger's $25 billion deal. Instagram, Meta, right, ticker Meta, launches teen accounts with parental controls. Yeah, I'd say that's necessary. Snap releases latest AR glasses targeted at developers. SpaceX doubles Starlink Wi-Fi order backlog with UAL contract. Dot green lights Alaska Air and Hawaii $1.9 billion merger. Oh wow, we'll see if the FTC holds that up and everything. And then point 72, Steve Cohen said to no longer invest clients' capital. We'll wrap it up there, right? On the last day that we will have rates at this same level. Um, on a like larger, broader human note, right? Don't go crazy with the rates dropping. Again, if you couldn't afford it before, that's probably the same case now. People get caught up in the hoopla, but listen, make your money work for you, right? Learn skills that are high value, continue to live below your means, take your money, multiply your money, and then coast, right? Coast and live life in your comfortable years without having to think about it. And other than that, we'll continue to keep an eye on, what's moving in markets and continue to leverage it. There doesn't need to be a whole, big build up. Again, all about managing how you move in markets is really just about managing you. So don't build up, this day in your head is something that's crazy and that I've got to be making 10,000 trades or this is the last opportunity. Nope. We've had tons of opportunity for the past 2 weeks coming into today, and we will have tons more moving forward, right? You continue to put one foot in front of the other, get 1% better, and you'll close the gap, right? You'll close that gap, and suddenly you'll look up and you'll be like, wow, I'm really him, right? I'm really her. I really do this now. And that's where we'll get together, right? So shout out to you guys. Shout out to the Stock Options Made Easy community. Let's make it another great day. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one. Peace.